Hello, everyone. Today we're looking at why Microsoft stock has jumped 15% yesterday and 19% in the past 2 days, which is a massive move for one of the largest companies in the world. When a tech company this big surges, it's usually because of three main things: massive revenue, rapid growth in their cloud and AI divisions, and smart money management. Over the next few minutes, we're going to break down the exact numbers and why Microsoft jumped this much in a short period of time. The main driver of the stock jump was that Microsoft beat Wall Street expectations. To understand why the stock went up, we first have to understand how Wall Street works. Financial analysts set estimates, basically target scores, for what they expect a company to earn every 3 months. When Microsoft dropped their latest numbers, they didn't just meet those targets, they crushed them. Analysts expected $87.6 billion in revenue, but Microsoft brought in $90 billion. They also beat earnings per share, or EPS, which measures how much the profit the company makes for every share of stock out there. Hitting $474 per share, beating estimates by 50 cents or 12%, showed investors that Microsoft isn't just growing, it's operating at peak efficiency. Now we will look at the earnings scorecard. First, total revenue, 18% year over year growth. This represents the company's top line, the total amount of money brought in. An 18% increase year over year in a mature sector indicates massive scale and successful market penetration, likely driven by high growth segments like cloud or AI. Net income, 24% year over year growth. This is the bottom line profit. The fact that net income plus 24% grew faster than revenue plus 18% is a key indicator of operating leverage. It means the company is becoming more efficient as it grows, converting more of every new dollar into pure profit. Operating margin, 45.1% profitability. This is an elite efficiency metric. It shows that for every $100 of revenue, the company keeps over $45 after paying all its operating costs. For tech giant, a margin this high suggests a dominant competitive position and very low incremental costs for their services. Free cash flow, $24.5 billion. This is the gold standard of financial health. It is the actual cash left over after the business pays for its operation and capital investments, like building data centers. $24.5 billion in a single quarter provides the company with massive dry powder for stock buybacks, dividends, or acquisitions. Azure Cloud and AI revenue surge. The biggest engine behind Microsoft right now is Azure. If you're not familiar with Azure, think of it as a super powerful digital infrastructure in the cloud where companies store data, run apps, and build AI models. Analysts expected Azure to grow by 40%, but it actually grew by 43%. On top of that, Azure officially crossed $100 billion in annual run rate for the first time ever. Azure crossing $100 billion in an annual run rate means the cloud computing platform generates sales at a pace exceeding $100 billion over a 12-month period. This milestone highlights massive enterprise adoption, cementing Azure as a dominant global infrastructure giant. To top it off, Microsoft told investors to expect 45% growth next quarter, providing that demand for cloud and AI services is speeding up, not slowing down. AI monetization and Copilot. A major question investors had was whether people would actually pay for AI tools, or if it was just hype. Microsoft gave a clear answer with Copilot, their AI assistant built into apps like Word, PowerPoint, and Excel. In just one quarter, paid Copilot subscribers it grew from 20 million to 30 million. That's a 50% jump in 3 months. Copilot alone is now generating an estimated $10 billion a year in subscription sales. This proves to Wall Street that Microsoft isn't just spending money on AI, they are turning it into real profit. Copilot alone now is just generating an estimated $10 billion run rate in annual recurring software subscriptions. And also, businesses are moving from testing AI tools to paying monthly subscriptions across all departments. Spending discipline. Now, building AI takes a massive amount of cash. Companies have to spend money on high-end computer chips, data centers, and electricity. This is called CapEx, short for capital expenditure. Wall Street was nervous that Microsoft would overspend and drain their profits. Instead, Microsoft spent $41 billion, which was actually under the $42 billion analysts feared. Meanwhile, as we mentioned before, their profit margin stayed strong at 45.1%. This proved that they can heavily invest in futuristic tech, such as NVIDIA GPUs and data centers, while keeping their finances totally disciplined. They prevented wasteful overspending and kept cash flow strong for share buybacks. The $678 billion contract backlog. This slide covers RPO, which stands for Remaining Performance Obligations. In plain English, RPO is a giant list of signed, multi-year contracts from major businesses that guarantee future income. Microsoft's RPO reached a staggering $678 billion, growing by $51 billion in a single quarter. What this tells us is that big companies like banks, car manufacturers, and healthcare providers are locking in multi-year deals to use Microsoft's tech. That guarantees Microsoft steady income for years down the road, which is a good sign. The summary and conclusion. To wrap everything up, Wall Street rewarded Microsoft with a 19% stock jump in the last 2 days because they delivered a complete package. 1. They beat revenue and profit expectations across the board. 2. Azure and Copilot provided that AI is generating massive real-world income. 3. They showed strict spending discipline while locking in nearly $700 billion in future business. This is why Wall Street loved Microsoft's recent earnings report and gave it a big stock boost. Now, we will look at our portfolio in Investopedia Stock Market Simulator. So now that we look at our portfolio, we started with 100K and now we have $103,675. This means we made a $3,765 profit. And when we scroll down, we can see that since we bought Microsoft, we've had an 18.35% gain in just 2 to 3 weeks, which is phenomenal. We will buy a new stock in the upcoming video next week, so stay tuned for day 2.